In this video, we are going to learn journal entries, how transactions are recorded in journal. Here are some examples are taken. 8 transactions are accumulated here for the purpose of understanding the journal. Suppose Mr. A businessman started business cash investment of $25,000. Here you can see a format of journal. Messrs. A Traders Journal for the month ended January 31st, 2000. We will record this transaction as in the business cash is increased. Whenever cash is increased, it is to be debited. So first of all, we will record debit effect of the transaction. Cash is debited by $25,000, and then capital will be credited by $25,000. You can see cash is recorded with date line, but the capital is recorded with some gap. It is the format of the journal. Whatever is being debited, it is to be recorded with the line of the date, and whatever we are going to be credited to be recorded with some gap. Here, this you can see at a glance what is being credited over here. Capital, cash. All transactions are cash transactions here, except capital and sales. In all transactions, cash is credited, and you can see very easily whatever has been debited, cash, furniture, shop rent, very easily at a glance. We can bifurcate debit items and credit items. Therefore, the format is generalized, and this is a standard format. Now, you can see transaction number 2, purchase furniture for $500. Here in business, furniture is being increased. Furniture is a fixed asset. It is being increased. Whenever the asset is increased, it is to be debited. Here in transaction number 2, in journal, furniture has been debited by $500, and cash, another asset, is being decreased. Whenever the asset is decreased, it is to be credited by $500. In previous video, we have discussed rules of debit and credit. Assets and expense whenever increased are to be debited, and revenue, liability, and capital whenever increased are to be credited, and vice versa. Paid shop rent for $500 in third transaction. In third entry, shop rent expense is debited. Expense is being increased. Whenever it is increased, it is to be debited, and cash is decreased by $500. Number 4, paid salary by $200. For transaction, you can see here salary expense debit, cash credit by $200. In fifth transaction, opened a bank account by $500. You can see in fifth transaction, bank has been debited and cash is credited by $500. Number 6, purchase goods for cash $200. You can see in the journal 6 transaction, whenever goods are purchased or purchased or sold, goods whenever are purchased, it is to be recorded as purchases. The terminology purchases is used for goods or merchandise. Whatever we are buying for the purpose of sale or resale, you can say it is our merchandise. Merchandise or goods whenever are purchased to be recorded as purchases, and whenever are sold to be recorded as sales. Here in transaction number 6, we have purchased goods. That is why purchases debit by rupees $200 and cash is credited by rupees $200. In seventh transaction, sold goods on cash by $200. In seventh transaction entry, you can see cash debited because we are receiving cash. Cash is being increased over here. So the cash will be debited by $300 and sales will be credited by $300. Last transaction, withdrew cash from business for personal use by the owner. Whenever owner withdrew cash from his business, his drawing will be debited. Drawing is known as personal use transaction and cash will be credited by $50. In all transactions, you can see there are narrations necessary for journal entries. Hope you will understand the journal by these transactions. In the next video, we will discuss credit transactions and cash transactions, or difference between credit transaction and cash transaction in detail, and transaction related to merchandise for merchandise purchase for merchandise and for the sale of merchandise. Thank you very much for the listening and watching.